So as we move along the mining exploration stages, we wanted to hear from someone who could provide some helpful advice to investors on what to look out for when considering investments at the development stage. With his recent successes at Great Bear Resources, and you may have heard of this company, he was a junior that was acquired by Kinross Gold for $1.8 billion. Last year, we kind of thought like maybe Chris Taylor, former president and CEO, and my former boss, would be able to share some insights about smart development stage investments. So everyone, Chris Taylor.
It's a bit of an odd experience actually to be in front of a room of people again. I'm out of practice after a year. I did promise my wife I'd take a year off and just kind of spend a lot of time at home, so I did that. And ran sort of like as one of these people that doesn't really have a job anymore. But I basically thought, Rita asked me to do this, and I thought, sure, I'll see what I can contribute to the discussion. So, benefits of investing in developers. Well, these are greatly de-risked relative to some of the early stage stories. So, generally, if you're in the developer category, you've gone through the different studies and everything else that you need to do to get it to the stage where you're appealing as a potential target for one of the big major mining companies. You don't invest in these guys for the 10, 20, 100 baggers and whatever the reaching for the stars type Great Bear scenarios. So these would be the steady sort of 2 or 3 times your money. If you got a good management group, you should also be limited on your downside. Everybody likes to throw around the Lassonde curve. I think it is a very useful tool. Generally, once you're at development stage, you don't see that curve flattening out to zero valuation. Although, if we pulled up a map of, say, the Red Lake District, you would get to see what that looks like when you bottom out on the Lassonde curve during certain stages as well. So we've seen that, unfortunately, again and again. New experience to me, one of the perks of selling the company. Precursors to success at this stage, make sure that the mine closure permits and plans are in place. That's a big deal in Canada. You're not going to get a mine built unless you've got those things locked up. So ask your CEO, watch him sweat a little bit if he doesn't have a mine closure plan in place. Also, a lot of people like myself believe that we are infinitely flexible and can learn anything. So the fact that we can discover deposits means that we can build mines. We cannot. We absolutely cannot. So it's a good idea to go and find people that have experience, that have built a mine before. We can learn. Of course, there's exceptions. Maybe I'm just talking about myself in that case. Make sure you've got a great relationship with your First Nations groups. An IBA agreement in place is an absolute must. Infrastructure, if it's already built, is a huge plus if you want to be successful in this, or maybe just find your deposit right beside the highway. And then the jurisdiction that you're working in here, it's important that it's both investable. So if you're always competing for dollars in this space to get things built, unless, of course, you're working with the streaming company, and then you're still competing for dollars. So you're always competing for dollars, but make sure that the jurisdiction wants to see investment dollars, and make sure that they want to put that money in there as well. So it's like real estate, location, location, location. And then things that go horribly, heinously, egregiously wrong in the developer stage, convoluted mining plans. I had lunch with my friend Bob Singh, our old VP Exploration, 2 days ago. And we were talking about some mine plans that we'd seen recently where there was trucking of ore across a frozen lake. So this is winter road ore haulage in Canada. And Bob was saying that he had worked on a project there, and they had actually driven their equipment through the ice in the middle of the winter. So you can imagine a loading mining truck falling through the ice and settling at the bottom of the lake. So things like that are a good thing to watch out for. So little clues. And generally, just going off half-cocked, if you try to go into production off of a PEA or something like this, or, just early-stage economic analysis, generally a very bad idea. One thing that's always a pet peeve of mine with the development stage companies is when too much money is going into promotion. And I can think of examples that I was discussing over bourbon and cigars 3 or 4 days ago, where the promotional budget was so high and it worked in the market so well for this particular developer that they ended up with over $1 billion market cap and a project value. They probably could have sold that company for a couple $100 million, but they'd driven the value up so high that there wasn't a single major producer in the world that would touch it. And that's a risk. So maybe you don't want to go over something like about 10% of your total budget into promotion when you're at this stage. The other thing is the CEO should be technical. I'd love looking at mining engineers in charge of a company at this stage instead of other types. Even an exploration geologist would take second seat in my mind to a good mining engineer when you're trying to put things into production. And one thing that also is a bee in my bonnet is if you've got a single asset foreign project, I would love to see some of the management living near that project instead of just relying on a country manager to do all the hard yards for them while they sit in Vancouver and play golf and hunt pheasants and other things. So, and then Rita sent me a Great Bear deck the other day, and it was kind of funny to go through this. So this was the last slide. This is November of 2021. So when I look at this, it's kind of amazing because we were looking at the share price appreciation over the end. So if you're in the developer stage, and remember this isn't really developer, but you can get it to the point where I looked at this and we had a $1.1 billion valuation, or almost 1.2, and we grafted on the next month when we announced the deal, and John had a really good idea on this one as well, but we grafted on another $800 million of value to this deal after this slide was created. And, a few things that you want to look for when you're going through a developer company is share structure. You can see there, just before we went into the deal with Kinross, we had 57.8 million shares issued and outstanding, no debt of any kind. And I don't know, I saw Peter Brown in here earlier, but if you look at the share price graph, it's good to know some Peters in this world for many, many reasons, not just the wine glass consumption and wonderful stories, but in the COVID crash, I remember the shares just tanking down to, I think they were like at $8 or something, and they tanked down to like a couple buck range. And it was Peter that put in some calls and got, of all the people to buy the stock, Jimmy Pattison, Mr. Automotive Billionaire. And it was Jimmy's purchase that ended up stabilizing the stock. And of course, he made a whole bunch of money on that, which he didn't need to make. So the other weird thing is share ownership. Now, you would not typically see this on a development stage company, but we were 66% owned by retail guys at the end when we were taken over. And, I was going to mention when you look at development stage companies, it would usually be the inverse. You would have like 66% institutional, 30% retail at this stage. That would be something I would view quite positively. Here, this was like hours and hours of phone calls with guys that were like, oh my God, I own 1 million shares of Great Bear and I'm going to be a multimillionaire and I want you to tell me about it every single day for hours and hours. So that's great if you have the time for it. And what it meant was a lot of dog walks when I was walking up the mountain behind my house, like Grouse Mountain, and my wife was like, my phone would ring and she'd give me this awful stare with her icy blue eyes. Like she can actually freeze people to death and punch holes in them with those icy blue eyes. Anyway, the point was, I was like, Julie, I have to do this because these are guys that own our shares and our share price is being supported by the retail investor. So make sure that the CEO of the company, whatever stage it is, developer especially, is putting in the time communicating with the shareholder base. It's easy to get complacent and just imagine the institutions are going to support your prices. Those guys do not support your prices. It's the retail investor on the last trade that supports the prices. And if the CEO doesn't know that, he's not doing his job. So anyway, just some ranting and random comments. The other thing was part of that 800 million we grafted on at the end was a discussion we had at the board level, but the idea did come from John, Doug Ramshaw and others to spin out the royalty company. And that was a stroke of genius that ended up benefiting shareholders in a major way. So, and a few things, I'm just going to stop talking. I'm not good at time constraints anymore. So when you're looking at development stage or advanced stage exploration companies, three things that would be super, super useful that everybody could learn from. One of them is disclosure. So at the end, to get a bunch of analysts like on board, we ended up disclosing every single assay that we got back from the labs. So it wasn't just a composite interval. Say you had from surface 18 grams over 15.8 meters. we'd put that out, and of course, a lot of people would think they must be smearing grade. I heard smearing grade, smearing grade, smearing grade. And I got so angry. I just wanted to, punch things, but I don't do that. I just go to concerts and breathe the air. That settles me down. So anyway, that's what we ended up doing, was complete transparent disclosure of assays. That was certainly very useful. The other thing, scale and grade. When you're looking at projects, there truly is like an advantage to having both scale and grade. If you can't have grade, you better have size. If you don't have size, you better have grade. Those are good things to keep in mind. It's a bit of an orphan period when you don't really have either. And, Great Bear being such a success really comes down to the shareholder, the ownership on that map. And, I know when you publish like the results of the disputes and everything, this was our situation. And I got this slide from Kinross's presentation after they took over the project. But this was Barrick that staked up all the land around us. And these are ultimately Kinross's holdings right there. So took years and years and years to build the competitive tension inside the deal. But ultimately, market circumstances, geopolitics, a lot of good luck all lined up together. And it was, like a holistic, virtuous cycle at the end. So, comes down to good people. Good advice is what really got us here. I've got two of my advisors sitting right here on the red couch, looking at us, looking at me with knowing eyes. So people were the main factor, but ultimately we got lucky. We made a major discovery, kept the share structure tight, and we spent hours and hours talking to our shareholder base. And those are some of the main factors that you can grill your development stage CEOs about. So that's it. Thanks, guys.